Hi, Theo here from electrofx.com. Just making another video response to a question in the electrofx.com forums. And the question was, how do you get, or how can you get these different scales of waves that I've been talking about printed on the chart for you? Now, I have included two extra indicators to try and help you with that. I consider these to be training wheels, and certainly the best way to do it is to do it manually. I mean, looking at the screen right now, for example, we can group together that this size of wave is certainly one to be looked at. Um, you know, it's quite obvious to the eye, but at the same time, it is, it can be nice to have this printed out for you as long as you agree with it and are willing to override when you don't agree with it, because when we start using indicators to do this for us, we're using something that is very mechanical and is not able to adapt to the market like you perhaps can. So if I just map out what we're looking at by eye here real quick, I'll get a different colored line. This is clearly something that's going on at a different scale of activity than what we just marked out. This is something that you might look at by eye as opposed to having it drawn for you. But this certainly is another scale of activity. It's the one scale of activity below the green line that I've mapped out. Now, if I use these indicators, I've included two. They're not included with the template because I feel that they're optional. I'd prefer it if you learnt to do that by eye to start with. I have created something quite nice to do this for you in the V1 course, but it's best to be able to do it by eye and then use the training wheels afterwards, just to sort of help you with the visual of certain patterns that you look for, like the double taps and the head and shoulder patterns and the trend continuations, etc. So they're named free ATM swing 1 and 2. In order to get them layered correctly, put swing 2 on first. There's only one input to really worry about, and that's the depth indicator. This will, the larger this number, the larger the swings will be, essentially, is the best way to say that. So if I just put on swing 2, we'll pop that on there. There's our green line, and then swing 1. I've got that preset to you at a lesser number, and that'll pick up that next one down. So as you can see, pretty good job. It's quite close to how I read it anyway, if not exactly the way I would like to read that. So, these indicators can do a pretty good job. Every now and then they're going to pick up something that you do not agree with, or just doesn't look right, and you need to override that mentally. So just be aware of that fact. Now, if we take a look at this picture, this is the free layout on a standard time frame candlestick chart using these two indicators that I've provided. What I've done with the V1 is to tidy up all the noise here and try and make our wave patterns more prominent. So if I flick over to a wave effects chart, which is what it's been called, as you can see here, it's a much tidier way of looking at two scales of movement. And this is a different swing indicator. It's been developed specifically for wave effects, and it's mapping out things quite accurate to how I'd like to read them. Now, the idea about looking at two waves of movement, as I've outlined already in the video course, is using one to trade the other. Now, what do I mean by that? And the use of these indicators, and I'm going to use the wave effects chart as opposed to the candlestick chart because it's much cleaner. We're using this tool, and it's really standing out for us that area was reacted from, it was returned to, and it was retested, and so that is a great wave to be taking. We're then going to be looking to get into this wave also, and it does stall for a while, but certainly you're essentially part of that wave as a whole if we just join that into one, because you would have entered at this point here as a trend continuation pattern. So if I draw that in a little bit tidier for you, this is, as you can see, just your trend continuation pattern. You'd be looking to be part of that wave and then that wave. These are two waves that you'd want to trade. If we just fast forward to the now, for example. The latest trade that we've had is actually a similar story setting up on the green line. Obviously, you don't know that that's happened at the time because this latest green line down has not appeared yet. So we're not interested in that. We're interested in the fact that it's reacted at a location, which was really a very solid location on an even bigger scale than that. And now, if you were trading, for example, this scale of movement, you now have a turning point into that, and therefore using the brown line, you have a third scale down, and you'd be using that line to trade that, enabling you to take advantage of this move. There's also re-entry points right here if you missed it, or if you want to add to it on that next wave down. And then we've got what's called a high-low breakout, where the price broke out, pulled back, and went again of this significant area, which is mapped out for us with another indicator here. Now, this is all a very basic way of reading things. It's certainly not perfect. I do occasionally have to override what I'm seeing from the indicator, but it's pretty close to what I want. So it's a great way to explain what I'm talking about when I say use one scale of wave activity to turn the other. And you can do this on a few scales, but you always need to be doing it on at least two scales, and using your faster wave to turn your longer wave and trade the trend continuations of it, because those are the most highly probable trades that you're going to get. Okay, so I hope this has helped. As you can see, you get quite similar results here on the candlestick charts with those indicators that I've provided. They're optional, and I consider them to be training wheels, and just a great way for me to really explain visually what it is I'm talking about.